et voilà. Pas juste un truc pour lire un truc, ça aide pas trop, c'est pas dans l'esprit, c'est, tu vois, pour pas passer du temps pour rien, ou tu vois ce que je veux dire, faire un truc qui est pas satisfaisant, ou, voilà.
Okay, so now we are recording for the event, and I will go to the share screen. Okay, so okay, we'll just wait a little bit because there are people in the waiting room, so I can't present while I'm admitting people. So just
do you allow people to show their faces, or it's on purpose here, no, without videos?
People they are welcome to show their faces if they like. It would be good if they show their faces and introduce themselves when they ask questions. But okay, I think in interest of time, I think we'll start now. Simone, maybe you let me know if there's another one there. Maybe just give people a couple of more minutes, 1 more minute, and then we'll start. Okay.
Yeah, Christian, I think we can start in 1 minute.
Okay. It's just Doris joining us as well.
Hi, Christian.
Hi, Doris. How are you? Happy New Year.
Hi, Christian. Happy New Year.
Okay, we are just waiting to allow everyone to join.
Maybe while we're waiting, everyone can post. Where are you guys now? Greetings from Zug. Is everyone in Switzerland or some people from other countries? Maybe just quickly post where you are so we know who is joining us today. Say hi, switch on the cameras. We like to see faces even though it's online. So
yeah, maybe you can use the chat box to let us know who you are.
France, yeah,
where you're
cool.
based. Yeah.
South Africa, Johannesburg, Geneva, Italy. Cool. London, Zambia, yay.
Okay, so we're recording. So let me start. That's the one last in the waiting room. It's Calvin. Okay. The rest I'll have to admit after my introduction once you're talking, Svetlana. Okay. Okay. So good afternoon, everyone, and welcome from Geneva in Switzerland. This is the third event of what we call the Impact Investor Circle series. The first session was launched. There's another one joining here. Was launched in November last year under the theme "Improving Access to Capital for SMEs in Africa in general," with a specific focus on Zambia, which is aspiring to become a regional impact investing hub through the work we are doing with the Global Steering Group for Impact Investing, the National Advisory Board. We have a lot of ground to cover over the next hour, and we thank all of you who have tuned in for your attendance today, especially those of you who have skipped the last part of the Swiss Alternative Investment Forum, which is taking place as we are speaking. Let me quickly present the house rules. Please turn off your microphones whenever you're not speaking throughout the event in order not to disturb the speaker and the other listeners. And do feel free to use the chat box to raise questions so that those questions we can't answer due to time constraint can be addressed subsequently after this event. The approach in the format of this virtual event is that it's a mixture of a short workshop during the first part, and then will be followed by a more traditional pitch, so to speak, of the facility, after which all of the participants are invited to ask questions. Let me just show you the agenda. So before we start today's webinar, I will hand over to my colleague from the Swiss Impact Investing Board, Mrs. Svetlana Banerjee-Borens, who will say a few words about the work she's doing as a founder and managing director of the Impact Investing School, which is providing training, coaching, and advice for private individuals, institutions, NGOs, and so on in the field of impact investing, both in Switzerland and internationally. And during the first part, Mr. Neil Fleming from the Challenges Group will provide a brief background and highlight some of the current activities that the Challenges Group is doing, both in Africa and other regions. And then secondly, he will present some of the most important achievements of the Challenges work in Zambia since 2010. And then Mr. Fleming, he is the director of the Challenges Group. He comes from a background in investment banking. Challenges he leads on market linkages and investment support for SMEs across Africa. The second part we will not do as usual by showcasing investment-ready solutions which have benefited from hands-on work done by Zambian accelerators, including Challenges Zambia. Instead, Neil will present the new Challenges micro and small and medium-sized enterprise facility. The event should also be seen as a contribution to the ongoing involvement within the Global Steering Group workshop series of how to improve capital for SMEs in Africa. This means that as an additional aim of today's event is also to come up with inputs to the SME Finance Action Plan. And in order to capture and disseminate more widely the key takeaways from this event, we have decided to record the proceedings. Finally, I will also conclude by introducing the next event, which will feature another intermediary from Zambia's impact investing ecosystem called Prospero. Let me just pause here for a second to invite more people who are joining us. So one more there and one more there. Okay. So before we introduce, let me just very briefly introduce you to 4IP Group. It's not moving. Voilà. So basically, we are an international group of what we call change makers. We are working towards becoming a leading financial advisory company within the field of people first, public-private partnerships, sustainable impact investing, as well as a market reference with Africa focus and a global outreach. We bridge the gap between finance and development, carving out a third space for global social and environmental solutions to deliver performance with purpose to investors, and also thirdly to establish our first impact infrastructure fund, whose unique impact investment focus will be on infrastructure projects with high development impact that will contribute to achieving the UN Sustainable Development Goals. Just a little bit, as you can see here, we are part of the sustainable finance ecosystem in Geneva, which today counts more than, today is actually more than 250. And we are today a service provider and hope to move towards an asset manager in this year. We have also subscribed to the Swiss Development Finance Declaration. Sorry, again, let me just admit more people joining. Okay. So basically, 4IP Group, we seek to help our clients to think about a framework for assessing impact at two levels. We need to understand the asset manager and understand what their commitment is on an ongoing basis to impact investing. We also try to understand if we can help them in terms of measurement and reporting on that impact. And finally, we need to understand whether they are integrating ESG at a higher level. The other aspect of our ESG framework is going a little bit deeper into the asset manager's portfolio. Okay, and lastly, basically the objective is that this Impact Investor Circle series can stimulate increased collaboration among non-traditional social investment partners, lead to the adoption of innovative finance approaches that would mobilize enough capital from the more than 250 trillion global private capital markets to finance the SDGs between now and 2030. And the aim of this convening today and the forthcoming events are to increase collaboration and to enable social investors to deploy more capital effectively across African continent, to transfer best practices and co-investment opportunities. So I hand over to my colleague, Svetlana. Over to you.
Thanks, Christian. And first of all, thank you for inviting me today to your Geneva event. And hi to everyone, to all the countries. I even seen there are people from India. So basically we cover almost all continents, which is amazing to see in these COVID times. So great to have you guys all here. To start with, so I represent today SIIA, Swiss Impact Investment Association, which is a platform to raise awareness about impact investing in Switzerland and abroad. And we also provide opportunity to connect investors with projects and of course experts with projects. So we are also working more with thought leaders, institutional investors, policymakers, and bringing institutional money into impact investing. So moving the whole thing on the big scale. We organize yearly a conference in Zug in Switzerland since 5 years. And our speakers are well-known people, like last year in October, we had Prime Minister, ex-Prime Minister of Netherlands, we had head of European Investment Bank of Climate Department, we have family like Brennick Myers coming and speak about impact investing. So it's amazing to be part of it. So if you're not yet a SIIA member, please join us. I would be more than happy to answer more questions, but maybe a little bit also about my background. And you might have seen I am also into other organizations, Galileo International Impact Investing, and founder of Impact Investing School. The whole idea is coming back to financial crisis 2007, when I was studying at the university. And actually at that time I was already thinking, how can we do good with finance? After working a couple of years in Swiss financial industry, I've seen that it's very difficult to make impact from inside the bank or any financial institution. So the decision was quite clear to leave the bank and really dedicate my knowledge to impact investing, to spread awareness, to provide accessible education in this topic, and to connect investors with projects, to move more capital into impact investment. And with this, Galileo is an NGO. We are doing awareness work, education for public and impact investing school. We are working with professionals who would like to transform, so to learn about impact investing. If you're impact investing fund or family office or bank, and you wish to transform, you want to educate your own employees, you want to know what is out there, which impact investing funds, existing ones, which you could white label, for example, or maybe you want to establish your own fund in impact investing. So this all is possible. And of course, we are also working with projects which are either fundraising or they want to open the door to impact investing, and then we need to incorporate impact in their business strategies. And I'm also speaking at universities here in Switzerland, teaching students, which is amazing that slowly educational sector is also moving to impact investing. And we are working nowadays online with different countries, and so the limits of borders are kind of lifted. It's much easier to teach on the other side because people are used to that. So feel free to drop me any questions. I'm here the whole session, and yeah, join SIIA, Swiss Impact Investment Association. This is would be great to have you guys on board and help you with anything. Thanks. Short speech. I think my time is over, so I handle it forward.
Thank you so much, Svetlana. It was very nice, very interesting. And let me, without any further ado, move on to our third partner of this event, which today is being represented by Mr. Peter Chinto. Peter, over to you.
Right. Okay. Greetings from Lusaka, Zambia.
Peter, you need to speak closer to the microphone so we can hear you clearly.
Greetings from Lusaka, Zambia.
Greetings.
Okay. All right. Let me go straight into introducing Impactpreneurs Africa to you. Yeah. So IPA, or rather Impactpreneurs Africa, was registered on the 23rd of March 2020. We are actually an impact investing advisory initiative. And of course, at the same time, a subsidiary of 4IP Group. So IPA is basically a spin-off from Impact Investing Exchange, IIX Lusaka chapter, which was established in 2017. So we focus on creating value for our clients, as well as social and environmental impact through our projects and programs. Then above it all, we also try to bridge the gap between capital and investment activities in Africa. So IPA's goal is to actually contribute to the transformation of Africa through the mobilization of impact capital and offering technical support to address some of the socio-economic as well as environmental challenges. And it's actually IPA's mission to impact lives within the African region, sub-Saharan region, of course. And in doing this, we actually focus on building sustainable communities. We also focus on promoting a sustainable planet. And then we also wish to democratize impact knowledge. And then just in case you're wondering, our specialties actually include impact investing, impact assessment, capacity building, investment screening, as well as due diligence, impact evaluation, regional integration and trade, and then research, among others. Now, recently, we just concluded a rapid insight farmer survey, which fed into the CDC Group's due diligence exercise to invest in some agricultural company. So the surveys were actually conducted in 3 countries, Zambia, Tanzania, as well as Malawi. And then what do we have in our pipeline? So we have actually strategized and set ourselves up for success the year 2021 and beyond. And we actually aim to improve the knowledge of impact investing within the Zambian ecosystem. And at the same time, going forward, as we seek to develop our strategic partnerships with various local and international partners, we also seek to expand our consulting activities within the region. And then some of our partners in these areas, of course, include 4IP, Women's Entrepreneurship Access Center, which is WIAC. And then we also have Satva Consulting. We have the Challenges Group, which is also present here. And then at the same time, we have the Graduate School of Business by the University of Zambia, including the Zambia Association of Manufacturers. And I would like to mention that we are yet to roll out our impact knowledge awareness exercise. This one is actually going to be in partnership with the Impact Investing School in Geneva, as well as the Graduate School of Business at the University of Zambia. So those are some of the things that we are doing. And then our work, knowing that our work is actually closely aligned with the work of the NAB, the National Advisory Board for Impact Investing in Zambia, we're also looking forward to collaborating with them as the year 2021 goes on. So just in case you wish to find out more, you can actually reach us via LinkedIn, Impactpreneurs Africa. Yes, and I can see that Christian actually shared our logo, which is a great thing. So much visibility for us. So for me, Peter Chintu, of course, once more greetings from Lusaka, Zambia. Thank you so very much. It was quite a short presentation I had for you.
Thank you very much, Peter. Very much appreciated. So now we go to the first part of the substantial part of the event. So basically, again, the purpose of the first part is to identify and address barriers to impact capital supply, generate actionable recommendations for stakeholders in Zambia and beyond, to increase the supply of impact capital across asset classes and a risk return spectrum. And the second purpose is to increase Swiss foundations' engagement with impact investing by way of their grants, capital, as well as endowment, in order to support the development of a pipeline of businesses seeking to address challenges associated with Zambia's National Development Plan and the SDG. So without further ado, let me pass the word to Mr. Neil Fleming. And Neil, should I?
Thank you, Christian. Yeah, I should be able to share my screen if you make me.
Yeah, to find out where you are on the list. Where do you appear?
While Christian's doing that, good afternoon and good evening, everyone. My name, as you can see on the screen, is Neil Fleming. If you can't figure out from my accent, I am based in Scotland. So I'm based in Edinburgh right now. And I am one of the directors of the Challenges Group. Before I sort of jump into presentation, it's really great actually to hear your background, Svetlana. I definitely I'm of a similar vein. My first job out of university was actually working in Morgan Stanley, working in something called credit default swaps, mortgage-backed securities, and collateralized obligations. So my get out there is that I never sold them. I sat in the middle and back offices, but that from a very early start in a financial career realized there's probably not going to be much impact here. And I think it's for me, investment and investing for good and really looking at impact has been a real driver for me, certainly over the last 10 years. I stepped away from investment banking and spent a year working in Malawi, where I was involved in a carbon credit project. So working with clean cook stoves on the ground in Malawi and looking at the potential for carbon credits to generate income off the back of that. That was in 2011. And very quickly, the carbon market bombed. So I don't actually know if it's maybe me. And as soon as I start getting involved in things, markets crash. But I think it's quite an interesting point, actually, because the carbon credit space is actually starting to really open up. And I'm assuming with Davos going on this week, and certainly Mark Carney, former Bank of England head, is now really pushing that carbon credit agenda. Again, I think there's even more exciting for the impact investing and certainly the climate finance.
Neil, I think you are the host now. Is it fine?
Cool. Yeah.
Okay.
So yeah, I'll try and go through this as quickly as I can. Apologies, I do speak quick and I do have a strong Scottish accent, so if anyone needs me to repeat, please just let me know. There we go. Hopefully everyone can see that okay. So yeah, I'm joining from, I'm one of the directors of the Challenges Group. We have an office in Edinburgh and we have 5 country offices across Africa. So we are a group of a family of enterprise consultancies focusing on developing and emerging economies. We were set up in 1999 by our founder and still chief executive, Ewan Mackey, who, similar to my experience and yours experience, Svetlana, he started out as a commercial lawyer and very quickly saw there was not going to be much impact in that line of work, and could he do something different where there's going to be real impact. So since 1999, we've provided over 100,000 on-site support days to SMEs around the world. We've helped deliver around 30 million in debt and equity financing and supported over 3,000 growth companies. I joined Challenges 7 years ago, just as we were starting to take a real focus on how can we grow local footprints and how can we grow local networks to really amplify our impact. So I joined at a time and was helped create our first country offices. So we now have offices in Ghana, Malawi, Rwanda, Uganda, Edinburgh, and Zambia, so where we have an office in Lusaka. And really, our whole approach is around enterprising solutions to global challenges. So the three main things that we focus on around the world, and what I should say certainly as we're kicking this off, is we have 5 African bases and countries. Currently, we're providing work regionally around those countries. So we have a team of about 50 full-time members of staff across those 5 countries, who majority will deliver a range of programme and advisory work in those countries, but they will also provide support regionally. So currently we're working in places like Tanzania, looking at things in Burkina Faso, etc. in the region. So, and also outside of Africa, we are working with a whole range of partners and supporting a whole range of programmes and advisory work across Southeast Asia, as well, from places like Myanmar, Sri Lanka, Malaysia, Bangladesh and India. Really, we have 3 main things that we focus on. How can we support small and growing businesses to improve and grow? And as I read that, it definitely is still very much our key mission. There's probably a slight amendment with the COVID-19 impacts that we've all been feeling for the past nearly 12 months now. We still very much are focused on growth, but we've definitely shifted our mindset and our approach to be focused much more on resiliency and stabilisation of SGBs. We also look to enable support ecosystems to work better. So where we see we can support incubators, accelerators, support providers within each of our markets or more broadly around the world. We also provide that support, and we're working with a whole range of different ecosystem players currently to improve their offering, to enable them to have bigger impact and really try to join the ecosystems up in each of the markets that we work. And then finally, we also, it's probably a little bit too much buzzwords to be honest as I read this out, but we're looking to sort of catalyse enterprise collaborations that can address complex challenges. What that means in practice is, how can we support and drive innovation to the areas that it's needed most? We are doing a lot of work right now where we're trying to support and operationalise research and innovation that's been spun out of universities, for example, in the UK and also in Europe, to enable that to feasibly go to market in Africa or in Southeast Asia, and really trying to bring the right partnerships around that, whether that's joint ventures, whether that's local SMEs that can take on a new product or service line, whether that's new areas for research that need to really be focused on. And we're seeing a real spread of the innovations and really a real interesting market, and being able to try and actually take them to market and really re-inform, I think, the global north on what is actually needed and where the gaps really are. Very quickly, our team, I said we're a team of about 55 in total. We split our organisation really into kind of two separate areas. One is our advisory team, which I'm overall lead for, based out of the Edinburgh office, and then we have our programme team delivering a whole range of programme activities in our countries. Giving you a very quick flavour of what we're up to around the world. We're running currently 2 larger programmes, or larger scale programmes across Rwanda and Malawi, very much focused on rural development around economic integration of smallholder farmers. One is in the coffee sector in Rwanda, which there's clearly a big alignment with Switzerland and the coffee sector. Really, the programmatic approach is never just focused on one thing. It's trying to bring in where real value can be added. So the key kind of focus for our coffee project was initially around growing coffee exports from smallholder cooperatives in Rwanda. That's expanded out massively in the last 3 years to integrating clean energy into their value chains, to looking at things like microgrids, solar, wastewater treatments, providing startup and small loans for young people that work within or are situated around those coffee value chains to actually access other opportunities, economic opportunities, and set up. We've supported so far 9 companies to be set up around those coffee chains. Coffee is very much a seasonal product with not a lot of harvest throughout the year, and so how else can we be supporting people around these communities to generate income and really access broader economic opportunity. In Malawi, we're working on a large project actually to really operationalize value addition centres. The World Bank put in around 25 million to build these value addition centres with phenomenal machinery, infrastructure. What was missing and where we've stepped in was a business model and a capable team in each of these value addition centres that could really operate them sustainably, could bring the product in, process, and that's working across 5 commodity lines, and actually create a market where those products can be sold and exported to, either exported regionally or exported outside the continent. And again, a really interesting point of that programme is we actually working with a banking partner on this, and what we found very quickly was that the smallholder farmers were looking for loans, and the banking partner is there to provide loans to the smallholders. As COVID hit, their processes tightened, their approach to lending stopped, and we actually had to invest our own capital into the smallholder farmers. Very small scale. We invested 40,000, and we are 6 months into that, and I think 70% of that has already been repaid. So we are starting to really see, and we're really driven by how can we look at finance differently? How can we really focus on the smaller end of the impact investment scale? What innovation and what support is really needed at that level to drive change and to really start to stimulate and grow the economic opportunity further up the scale? We're involved a lot in job creation programs. A couple of examples, and I won't jump too heavy into them. We firmly believe, and from my slide with our team, we have a relatively young team across the continent, and we firmly believe in backing young local talent and bringing them on a journey with us to really grow the local capacity in each of our markets, and to really sort of cement their skill set of the young local people that we work with. We've done a lot in this space. We've probably worked with near on 3,000 young people over the last 5 years in preparing them for employment. If anyone's looked at the unemployment stats as a whole around the world, but certainly for sub-Saharan Africa, it's very, very scary. And we've combined that kind of youth employment and job creation piece really hand in hand with SME support, and we firmly believe and see SMEs as the driver for job creation in all of sub-Saharan Africa, particularly the markets where we're present. And we've had a lot of success in actually demonstrating that the practical training that can be given to a young person by placing them inside an SME not only helps the SME and the next steps, which I'll get on to later, but also they are the perfect job creation engine in these markets. They're not bound by corporate or large structure hierarchy, and actually the impact that young people can have through a 3, 4, 5 month placement in an SME, we've seen a phenomenal return on the jobs that have been created and also offered to the young people in our market. So one to highlight is that we are now a strategic partner with the Standard Chartered Foundation, which is a newly launched foundation last year from Standard Chartered Bank, who have a real focus on employment and driving job creation for young people. And we're now a strategic partner of the foundation, really looking at that job creation piece, really with SMEs at the heart of it. And we think and believe that that is what's going to direct the future economies of the countries we're working in, and certainly Zambia, and certainly young people can really be the driver for change within these SMEs and can really actually kickstart the impact investment conversation, and I think actually help move that to the next level. We run a large, sorry, that picture's a little blurry. As I mentioned, my role really is to run a large advisory work. we've got a big range of advisory work currently on the go across all of our sites, from direct one-off SME interventions to running training, to running feasibility and research for a whole range of clients and funders. Across 2020, we shifted drastically our support and how we offer that to focus much more on resiliency and much more on how can we also be flexible and how that support is provided, not just let's go to Zoom because Zoom's great, actually going back to old school phone calls, old school pen and paper, working with SMEs hand in hand to really help them understand the challenges that were going to come and solutions and plans for how they may mitigate the effects of COVID-19. Interestingly, we've developed and delivered a lot of that resiliency support across 2020. What we found was a lot of SMEs were not really seeing the impact of COVID, and certainly in Zambia, next door in Malawi, and in East Africa, Uganda and Rwanda, the companies were not starting to see it. However, across 3 days and the week before we all finished up for Christmas last year, we had 4 different SMEs across 3 countries phone our teams on the ground, because they were now seeing that economic hit happening. They were not being paid by large customers. They were not being paid by supermarkets. They were having banks, where they already had some debt, phoning them and demanding even more payments to come back in. And across Zambia and certainly across the region and across sub-Saharan Africa as a whole, we firmly believe, and we're already starting to see this, that the economic impact of COVID is now going to hit even harder going into 2021. We're seeing lockdowns, we're expecting more lockdowns. The scale of impact on the economic activity, I think, is going to be unbelievably huge. And it's something that we're trying to really understand and be at the forefront with SMEs. Conscious of time as well, Christian, apologies. We've done a lot of work in investment and impact investment. We trialled a model from 2015 to 2018 that was funded by the Argerius Foundation, from the very nice Brennick Myers, who you mentioned, Svetlana. There was a lot of learning coming out of that. That was really focused on a range of partners coming together to generate pipeline and to trial an investment syndicate approach. I'll be honest, and the report I think is out there, Argerius are very much on their learning. That model did not work anywhere near as well as it could have or as it should have, and there's lots of learnings that we've certainly taken on board from that around the matching of investor appetite to that pipeline, the actual realities of what pipeline looks like and what that means. And that's certainly a lot of the lessons we've taken into our new facility idea, which I'll explain in a little while. We also do a lot of investment support to larger companies as well. So we're working with the Ashton Trust, which is based in the UK and provides a whole range of support to climate focused and renewable energy companies. A broad example of some of the companies that we're currently working with in the background on helping them, investment preparedness and investment readiness to raise external investment. And then jumping into Zambia specifically, so we've been in Zambia on and off since 2010. I helped set up our office there in 2015, and across the last 6 years, we've worked with around... Sorry, a wee bit of background. We've worked with around 300 SMEs on the ground. We've worked with a variety of clients, funders, partners, including accelerators and incubators in the country, including Prospero Zambia, who are going to be speaking next month. We've worked with them very closely over the last 3 years. We're currently delivering a range of advisory work in the mining sector, where we're trying to understand how SMEs can better engage and better supply into that mining sector in Zambia, taking a lot of our lessons from West Africa, where we're working with a large mine, a large gold mine, on really looking at community investment and them helping them, I suppose, take more of their first steps into impact investment, and how do you actually invest in the local community around the mine, because the mine is going to close and the economic opportunity is going to leave. And we're doing a lot of that now in Zambia, and we're starting to see a really interesting space, certainly around the mines in Zambia, and trying to shift that mentality from CSR to CSI. And what does that actually mean in practice, and where are those opportunities that the mines could start to actually invest some of that money now before they start to close. We're doing a lot of work in Zambia right now in the dairy industry as well, and working with a larger program and understanding the barriers in the dairy industry in Zambia. We're doing a lot of work in the investment space, and certainly we've been involved with Impact Capital Africa, which is an investor showcase that's been run over the last couple of years in Zambia. So I was lucky enough to be there in 2019. Obviously, it was off the cards in 2020. And, you know, I think what we're seeing is that there's, and from the intros, that there's a growing need for capital in Zambia. Is it working? I'm not sure. And I'm, you know, I think the point of these is also to stimulate conversation. I think when you look at the Zambia example specifically, and some of the deals that have been done, and there are some very good and very interesting deals, the money is very much sitting at the high end of the scale. And you know, I think the ICA numbers in total, I think they've sort of facilitated around $80 million investments across 20 deals. There's not really SMEs that are accessing the capital. These are really large investment deals, and there's a whole level below that in Zambia, which need more innovative, more patient, more flexible capital. A large focus for us this year in Zambia, I touched on it earlier on. So we're now the strategic partner with Standard Chartered Foundation. We kicked off a scale up of that project. We started with a pilot in Uganda 2019, and we've now moved from 2020 to scale that program up across 3 sites, Uganda, Ghana, and Zambia. So we're kicked that off now in Zambia, and it's taken a lot of our focus right now. What that program does is to find young people, provide them with a whole range of training and support around consultancy, around management and leadership, and embeds them into an SME for 3.5-4 months, where they deliver a whole range of business development support. They start to understand investment readiness, and they also work to train the enterprise staff around that. So we're kicking that off really as we speak, which is also unfortunately why none of my Zambia team could join the call, and I'll be our pseudo Zambia team for today. We're going to be working with 40 SMEs in Zambia on that program, across a range of sectors, across a range of sizes, from micro to small to some medium. We'll also be working with 40 in Ghana. We'll also be working with about 80 SMEs in Uganda. So the program itself is supporting 200 SMEs, and it's supporting 200 young people to really help those companies perform better, to understand the barriers internally, to look at supporting and linking into external support. What we've done now is really embed that resiliency support that we've been delivering into this approach. So as of this week, we now have, I think it's 150 young people in 150 SMEs starting to understand the impacts of COVID, and starting to understand the impacts that these SMEs are going to start facing, starting to understand what their investment needs truly look like, and really start to begin the conversation for us on our side around how can we try and do investment a little bit better? How can we try and provide more flexible, patient, demand-driven capital from a real live set of SMEs, not just you know, kind of take a current approach and try and look at this in Zambia. And you know, I think there's a really strong opportunity, and certainly before I'll maybe pause in a second, because I'm keen for any sort of questions or clarifications. We believe there's a real opportunity here, and I'm really excited to certainly present today, because I by no means have any, if all, of the answers. And we believe that with COVID and also the development of the impact investment market, and Christian, from your diagram earlier, phenomenal amount of phenomenal number and range of organisations really engaging now in impact investing. What does it really look like at the smaller end of this, and how can we really start to engage and work with partners to help us and to help the broader market really understand the realities of impact investment at the smaller end of this scale, because it is the impact potential is huge, and the learning potential is also huge to take back into the sector. So maybe before I jump into our idea, certainly our facility, maybe just pause for a second and hand back, Christian, if there's questions or clarification points.
Yeah, thank you very much, Neil, for this very interesting presentation of what you're doing all over the African continent. So since we're a little bit behind schedule, there's time for 3 questions at this stage. So it'll be a second round, as you know, where there will be a possibility to ask questions regarding the facility. So if anyone has a question, please introduce yourself, name and affiliation, and keep the question as short as possible. Thank you very much.
I think I've got off the hook. I can maybe just go back to my presentation.
Looks like everyone is very shy here.
Maybe, I don't know, Neil, let me start with a tentative question. Since you're operating in countries such as Uganda, which is a much bigger country than Zambia, and also in Ghana, which is a middle-income country and more advanced than Zambia, do you see the same in terms of the barriers, the constraints that you are talking about for SME finance? Where are those countries which are a little bit further ahead on the curve and their evolution or development compared to Zambia, and how do you work as an organization, since you have offices in several countries? Are you taking those lessons from Ghana and Uganda to help in your engagement with the Zambian SMEs, or how do you go about that?
Yeah, it's a really good question, Christian. I would say there's pluses and negatives, I suppose. Sorry, positives and negatives. Zambia is much smaller and certainly probably a less developed market for SMEs and for impact investment, and for support. I think the support sector is getting bigger in Zambia. Does that mean that there's more capital available in Ghana for SMEs? No. Does that mean there's more capital available in Uganda? No. The challenges are very much the same, and they're almost maybe further exacerbated by a larger level of support and certainly a bigger ecosystem sitting around. I think one of the challenges we are consistently seeing across all the countries, and Zambia not feeling it as much because it is a smaller environment, is SMEs bouncing around all of the different funded support that's out there, and the support never really actually focusing in on what it is they need. So they can jump from incubator to incubator, accelerator to accelerator, to donor funded technical assistance, etc. But in Ghana and in Uganda, it's never really joined up. And I think there's a real opportunity for Zambia, because it is on the smaller side, to actually learn a lot from a really big and burgeoning ecosystem. Actually, it's still never been built from the demand side, which is an entrepreneur or is an SME. So, I think the cost of capital, certainly in Uganda, is still astronomically high. There is more capital in the market, but are the instruments and the types available for SMEs correct? I don't think so. Ghana, again, they've again gone quite high and heavy on the bigger investments, which is good. But again, there's still a huge, I think, vacuum in the smaller end of the market. And we're trying to work really hard, and we're also keen to really nail that learning, I suppose, over the coming sort of 12 to 24 months around country-specific approaches, and actually where those lessons can be learned. I think Calvin has his hand up.
Okay, please go ahead.
Thank you very much. Hello, Neil. Thank you so much for your presentation. I just wanted to get a further appreciation of your work with the Standard Chartered Foundation in Zambia.
Yeah, sure. Thanks, Calvin. I'll try and keep it very brief. I'm very happy to share information after the call. But so that is funding our kind of youth employment program, working with SMEs. So we have a 1-year commitment right now. We're looking to scale that up to a longer term commitment from Standard Chartered Foundation. And really we're providing support. So we've recruited a range of young people and we're training them and have just placed them into 40 SMEs based around Lusaka. And they will deliver a whole range of resiliency and diagnostic support to SMEs, starting to look at areas on investment readiness and starting to look at areas around due diligence. And also more of the core operational areas within an SME, things like HR, finance, sales and marketing, and governance. And that's the program itself is running until July this year. And then we're hopefully going to be scaling that up across Zambia. We haven't got the specifics on that yet, what that looks like yet. What that could mean is we expand out of Lusaka into other regions within Zambia. But yeah, I can certainly send on or direct you to more information on the program specifics.
Okay, thank you. So would it be safe for me to conclude that my understanding on that is incubating about 40 SMEs in Zambia, and of course incubating them towards a certain objective through youth employment programs?
You said it a lot better than me, Calvin. Yes, thank you. Absolutely. Yes.
Thank you.
Maybe just one quick, are there anyone else for one last question? I guess everyone is excited to hear more about your facility, Neil. So, but maybe before we just jump to the facility, unless there's any other questions, I can't. Simona, are there anyone? I can't see from my side if there's any people who raised any hands. I was very curious to hear if you could just briefly elaborate on the fact that you are thinking about expanding outside of Lusaka, because that seems to be a challenge that you find in many African countries, that all of the ecosystem, all of the intermediaries are centered around the capital, and these services that you're providing for SMEs are it's very difficult to find them outside of the capital. Are there any of the other 4 countries where you operate in Africa where they have rolled out the provision of business development services and support services outside of the capitals?
Yeah, and I think we are looking to expand that, and we previously had an office in Kitwe in Zambia, which as part of a previous engagement, we closed that for a variety of reasons. But yeah, I mean, and so in Malawi and in Rwanda, we have an office in the capital. Certainly Rwanda on the coffee, it's the south and west regions of Rwanda where there is not a lot of BDS support, and we are trying to really refine that model and how do you actually build the markets for the rural populations, and how do you really adapt, I suppose, the training and support as well to smallholder farmers, to a whole variety of people within that rural area. How do you support them to access opportunity within the capitals? So we're really trying to look at that kind of market builder approach, and is definitely something that is in the back of our minds as we're looking at Zambia, not just having to deploy staff from Lusaka to go various places for delivery, but can we actually kind of set up and focus more of our efforts outside the capital? I think that's also where the economic opportunity does sit, and it's certainly where capital is not going to, as I've kind of touched on in our Rwanda and Malawi examples, where we were working with finance providers, and even then they still were not providing finance to really the population that they were created to serve. And so I think there is still a lot of innovation needed around that rural area, and how do you actually blend and join the rural and the urban markets together.
Okay, great. I can see that Doris and others have asked a few questions, but I think, again, in interest of time, those questions that Neil will not be able to answer at this session, we'll share those questions with Neil. And you can either write directly to us at 4IP or the Swiss Impact Investing Association or IPA, and we can connect you so you can have an exchange beyond this webinar. So I think, Neil, everyone is very eager to hear about this new facility. So let's get that going.
Let's get that going.
Yeah.
And I promise I won't talk as long this time. So, yeah, as I mentioned and touched on, the support that we're providing through Standard Chartered Foundation for a long time, the last 18 to 24 months, we've worked, as I mentioned earlier on, with a lot of investors. We still do work with investors, whether that's supporting pipeline generation, investment readiness, or more and more probably post-investment technical assistance support. We've asked ourselves the same question time and time again. Are the current instruments that are in the market where we are, and are the current instruments being set up in the markets where we are correct? We don't believe, well, we believe they're correct for a certain level. We believe that there is flexibility and innovation needed. And we've been trying to look at this with a variety of partners over the years. As I touched on, we looked at things around the syndicate with our Gideus Foundation, which didn't quite work as planned. And so we, for the first time in our 22 years, we decided, do we need to actually try and look at attracting and investing capital ourselves? We've started doing that over the last 12 months with some of our own reserves, where we've taken small positions in SMEs. So I mentioned the Malawi, where we issued 40,000 debt into smallholders. We've also taken a couple of different investment positions in an online education provider in Malawi. We have taken position in a sort of marketing services company as well. We're currently looking at a yogurt company in Uganda on the smaller scale. And alongside all of that, we wanted to actually get a better flavour for what does that actually look like. So over the last 12 months, and certainly this has been accelerated because of COVID, we started to build our own investment facility that we're now kind of taking out to the market. Compared to maybe a lot of pitches or a lot of things that you may be part of or privy to or listen to, I'm certainly not going to stand here and promise you X amount of impact and promise you X amount of returns. What I'm asking really, I suppose, is that we want to try and test a model out, and we don't by no means know all of the answers. And we want to trial a new mezzanine finance facility for small businesses that we hope can really allow a patient partnership approach to investment and support. What we're seeing is a fragmented market. We can see a lot of technical assistance money being provided by donors, by foundations, by big bilaterals, and then we can see certainly from a Zambia point of view a burgeoning impact investment space, but it's still geared towards traditional investment structures. It's still geared towards funds. It's still geared towards the higher operating costs and the higher tickets needed to justify any of that, and also the risk return that sits alongside that. So we've modelled and structured in the background with our very nice pro bono lawyers an investment facility that will sit within our not-for-profit entity. So again, we're not going to run around yet and start promising huge financial and impact returns, which I think is the nirvana that everyone is looking for, and we certainly are not here to claim that or offer that to you. I think this approach is very much geared around quasi-equity. So we've done a lot of work in the background, and we've been looking at this with various partners across the continent and been able to offer royalty-based lending approach to SMEs in Zambia, but also in Ghana and Uganda. So we're we're currently looking to establish the facility to respond to a selection of the 200 SMEs that we're currently starting to work with. We're really targeting that early stage capital that can offer a blended approach of investment into a company. The deal size we're looking at is between 25 and 75k, but in reality probably 25 to 50, very much on that smaller end, patient, longer term capital. The mission of the facility is really to try and stabilise now selected SMEs to survive, navigate and thrive again in future market conditions. We're seeing the impacts of COVID. We were already looking at a royalty-based lending model early last year and paused on that, if I'm honest, because of COVID and because of us trying to understand the impacts of COVID and what that actually means. We think now more so than ever that the royalty-based lending approach actually lends itself phenomenally to COVID recovery. So what it is that we're looking at is a blended capital disbursement into an SME, with contracting and all of that done, as I said, by our pro bono lawyers to really minimise the cost of operating the facility. But we're looking to put that money into an SME and on an agreement that repayments will begin when they reach pre-COVID revenue levels. It's risky. We know it's risky. We also believe it's potentially a huge opportunity to really help SMEs survive and be there for the longer term. There's lots I could go on about this, and I'm really conscious of time, Christian, apologies. We're trying to understand this, so we really want to test this model this year. We believe there's a real opportunity to try and look at this from a different lens, to look at it as a partnership approach with SMEs, to actually combine support and capital into a much more efficient vehicle that's actually driven by really what the SME needs and what is best going to support them. The prime example I have of this is during COVID, we looked at an opportunity and we actually submitted a concept for an opportunity to manage a pot of capital in Zambia specifically for COVID funding, COVID relief that was looking to be issued as just straight debt. The challenges on actually, and the person or the organisation had the capital and still have the capital, and we're looking to issue that from June last year. But the bureaucracy and the risk parameters that they were looking at when we're dealing in a global pandemic where no one really truly knows what's going to happen next week, means that money is still sitting because they're still waiting to appoint an appropriate fund manager to manage that capital and issue that capital. That means that there's however many SMEs that are desperately in need of capital to survive still don't have it because the structures and certainly the approach to investment are not quite aligned yet. And that's not me, I suppose, moaning for the sake of moaning. I think we were really keen to try and look at this type of approach with that funding, and I fully understand why the partner didn't want to look at it that way. But I think it highlights the point that there's a hold up in getting capital into SMEs right now, and there's a hold up in terms of are the structures truly correct for deployment of capital into SMEs across sub-Saharan Africa, specifically in Zambia. There was a report come out last week, and Christian, you tagged me in it on LinkedIn, but and I can't remember the name of the guys in Kenya that released it, but there's a phenomenal report on, you can't just take the models of Silicon Valley and assume that's going to work across sub-Saharan Africa. And most definitely when it comes to investment, I think right now you can't just take the models of Europe, of London, of Edinburgh, of Switzerland in terms of investment funds and assume that's a blanket approach to Zambia and certainly to sub-Saharan Africa. So we want to try and do something different, and we want to take and trial a different approach. We're looking to raise about £500,000. We're not looking to raise millions and millions because we don't know if this will work. We think there's a lot of learning to be taken from this. We've currently got about 150 secured. not to ask anyone on this call for money. We're also really looking for people that can help us understand this. We think there's a lot of unanswered questions here. There's certainly gaps in our model, and really we're looking for partners that can help us trial this new sort of approach and be able to start deploying capital by June 21. Off the back of our Standard Chartered programme. We're in conversations with a number of foundations right now around securing some philanthropic capital in. Would also welcome any conversations if people are interested in what that looks like. What does it mean in practice? We're looking to source sort of 3 to 5 deals per country. So for Zambia specifically, we'll be looking to invest in between 3 and 5 companies by sort of June onwards this year. So sort of 10 to 15 pilot deals in total across 2021, putting a plan in place for each deal and invest over the sort of 3 to 5 year horizon. And really what we want to do with this investment facility is, and it's not creating a new investment fund, it's housing it, as I mentioned, in our not-for-profit entity and being able to deploy that efficiently and effectively through our country footprints and deliver that through sort of business-to-business agreements. So again, we're not setting up and going after or having to bear the cost of licensing and all of these things in the Zambian context. We can run this through our current setup. Is actually create a bit of a living learning lab, and that's a bit of a mouthful, and particularly with my Scottish accent, so apologies. But we really want to learn, and we also want hopefully innovative and interesting philanthropic partners to be part of that journey with us. We really do need to understand what are the instruments and how can these types of agreements and these types of instruments, how can they really bind the capital, the technical assistance, the company and the community around it together? And what does that flexibility truly look like? I think, one-off interventions into SMEs, and we've done a lot of them over the years in our work around the world, and certainly in Zambia. One-off interventions on support don't work, and one-off interventions on capital do not work. You need to really join the dots, and you really need the flexibility and the demand, the demand side to be listened to, which is the SME. I think we're almost trying to take that square peg and put it in a round hole of capital instruments and finance investment right now for the earlier stage of what that looks like in Zambia. And we know things change. We know things change for SMEs. This time last year, no one predicted a global pandemic would close the world, and the economic impact of that is now being felt. We know that things change on a day-to-day, a week-to-week, a month-to-month basis for SMEs, and just a big huge capital investment into an SME is not going to make it the next unicorn. And certainly across all of our markets, I don't think there's going to be a lot of unicorns, and that is actually a good thing, because what we're focused on is longer term patient support and job stability in the markets, and really try to take the learning out of that. So being able to look at deal by deal discussions, again on Christian's point, also starting to look at country comparisons. So really excited to see what does this look in reality in Zambia compared to Ghana and West Africa with a more established ecosystem, and Uganda, and excuse the wording, but really keen that we can build a group around this that it really works in all. It's not just another fancy report that's kind of glossed up and is trying to show impact. It's really trying to get to the heart of what does this look like in reality, and what can be learned and shared across the sector to really better inform smaller, earlier stage capital injections into SMEs within Zambia, and certainly within sub-Saharan Africa more broadly, and really grow that network of learning and really try and build a group around us and that can help us really take that learning into action. I'm conscious of time that there's lots more fancy documents and lots more information that I can certainly share, or I would be very keen on if anyone's interested in what it is we're talking about or trying to do here, very keen to have a follow-up conversation or a joint conversation with Christian and the team. But I maybe in the conscious of time, throw it out for any questions or comments. I would certainly love comments around, is there appetite for this type of idea, or has it, we don't think it's really been done a lot or much, and we may also be missing that. So if anyone is seeing models that like this that we can learn from as well, very keen for any questions or comments. I will stop talking, apologies. Christian, back to you.
Well, I certainly found that very interesting, and it is indeed a gap that has not yet been filled out. So, so I hope that those of you who are still with us, despite the fact we've gone a little bit over the timeline, are there anyone who want to take the advantage of having access to Neil? And so please introduce yourself, your name and your organization, and pose a short question. I don't know, Simone, if you see any questions down in the chat box, you can also read them out if they are related to the facility, because there was a few questions that was asked for the first part of the event.
I think I take an opportunity to say bye because I need to run to the next meeting. So thanks a lot, Neil, for your presentation, and happy to stay connected.
Thank you, Svetlana.
Yeah.
Thanks, Christian, for inviting. Bye, everyone, and have a nice evening.
Good evening, Svetlana.
Bye.
Okay. Okay, well, if there's no one, let me start asking one question from my side. As you know, numerous surveys, they have kind of enumerated what are the most important criteria for impact investors, such as management quality, investment targeting, for example, minority stakes, that would be highly dependent on the quality of existing management. Also, the issue of taking control, the scale of the business, what is financial sustainability, and what are the possibilities to exit the investment. Those 3 to 5 pilot SMEs that you're looking at, Neil, what were the kind of the major screening criteria that you used in selecting those?
Yeah, I mean, so we're still going through that right now, but I think the key one at that early stage in the smaller end of the market is definitely the team and the chief executive or the managing director, or who is the senior team around that. So we're doing a lot of work around the experience of the team and their ability to do that. For us, there's a big piece on impact. There's a big piece around can this company hold or grow a position in its sector or in its area? And as I said, it's less around, we're not trying to model this from a return point of view at the very beginning. So we want to understand what previous revenues look like and what is the sensible plan with COVID and everything else that's going on. What's a sensible plan that we can actually support that company to get back to? So, and having a flexible investment that allows them to to grow a team, to buy some capex, to have a bit of a cushion around cash flow and around the drains on cash flow potentially. And so in terms of exit, that's a very good question. We're one of the key things that we really want to do with this facility is help SMEs and the smaller end of that scale prove that they are able to take capital on board, that can be done and can actually be paid back. So although we're saying this is patient, and we're certainly not setting strict payment deadlines with SMEs, we're very keen to work with them in partnership, and they can pay that back and as quicker, and really sort of catalyze them on to raising further investment and be in a much stronger and stable position to have sensible conversations with the investors at that next level up around exits, around returns, around stakes. We're not looking to take equity positions in the companies. I think, interestingly, when you look at Zambia specifically, there's quite a large gap in knowledge of the realities of investment, and I certainly found that being in the ICA conference in 2019. And part of what we're trying to do with the facility is actually open their eyes to the reality of investment, but do it in hopefully, well, risky from our side, but certainly from the company side, they can actually start to understand what it looks like and what it means to have investment going into them, and how they can actually change and react their business to be able to start to pay some of that back.
Isn't there a risk, given the fact that we are operating in unprecedented times with the COVID pandemic, that the way you structure the facility, given the fact that many of those SMEs are in a liquidity trap, that most of the funding that they will get from the facility will not be used on CapEx, but rather being used to address the working capital and the immediate operational expenses needs, so that you are putting in place a facility that might not reach, let's say when you have a more normal environment, or how do you see that challenge, Neil?
You know, our name's the Challenges Group. We like challenges, I should say that. It is challenging, and I actually think now is the time to try and shift the dial on this investment piece for the smaller companies, because I think it's the smaller companies that are going to survive, hopefully. It's the smaller companies, certainly in Zambia, that need the investment on that sort of first rung of the ladder to be there for the longer term and to provide job opportunities and to provide income opportunities for the longer term. You know, I think the way that we're structuring the facility, certainly in terms of it will be housed within a not-for-profit entity as we test and as we pilot this. The longer term ambition was we can prove that this model can work at that earlier stage, and we could move that into more of a potentially more of a traditional investment structure. And so, you know, we are also fully aware that some of this capital will be lost, and companies may not survive, or certainly it will take them a lot longer than we're modelling at the beginning to pay that back. But we also think now is the time, because I think now is the time to try and look at this through a different lens, and now is the time to try and use capital that is already there and has been hamstrung by other structures. So the Zambia example I used, you know, that £1 million which was earmarked for COVID relief is still nowhere near an SME, because the structure that is being sought or has been assumed is needed to deploy that it is not certainly as developed as it is in Zambia as elsewhere. And so, you know, and that money certainly was not, they were not asking that money's fully repaid ever back to the funder or any of these things. And, you know, so that we're getting really frustrated because the market is also slow sometimes to respond, and COVID has probably exacerbated a lot of that. And we feel now there is a real opportunity to, certainly more on the philanthropic side right now, but to really try and look at how could we do this a bit differently for the smaller end. And yes, that does mean riskier companies, and that means riskier capital. But it also means that by picking the right companies and supporting them over the longer term, we should actually have much stronger companies coming out the back of that who can then start to jump up to these the more traditional investment and then these larger areas.
Okay, thank you. Any other questions? We have, I would say, maximum 5 minutes left. Well, as you saw from an earlier slide, Neil, in the presentation, as you can see here, I mean, since you're reaching out to foundations, we have many foundations in Switzerland. So that is maybe something that you might want to take into consideration. In addition to that, in Switzerland, we also have the UN SDG Lab, which is really dedicated to sourcing. You can see that down here, the UN SDG Lab. They're dedicated to sourcing innovations such as yours. So I would highly recommend that we can also facilitate the contact with the people that we had invited for this event. They might watch it on our YouTube channel subsequently, but you might want to reach out to them as well. I'm sure that they will be very interested, and also maybe sharing some experience that they have collected around the world, because that's really what we need to share experiences to address a problem that reaches beyond the African continent. Any other questions before we maybe wind up? Simone, can you see if there's anyone has raised any hands or put a question in the chat box? I don't know if you can see that, Simone.
Apparently not.
No. Okay. Okay. Well, then I will just, if there's no one else who has, let me just mention this for the audience. So just to highlight the fact that, as you know, 4IP Group is based here in Switzerland. We're a member of the Swiss Impact Investing Association and also Sustainable Finance Geneva. So, as you know, Switzerland has one of the longest track records when it comes to microfinance. With, I guess, I'm just thinking aloud, Neil, microfinance. So in a sense, you're doing a microfinance approach, but you're not doing the lending, you're doing the equity approach. But it's what are the similarities between microfinance and what you're proposing?
Yeah, I think we're probably like one level up from microfinance, and I suppose the microfinance model again was kind of straight debt, and we're trying to look at that quasi equity approach where we're not putting it in on strict payment schedules. We've worked with a lot of microfinance as well, and we know them, and I think it's just trying to take it. Really, for us, it's trying to push that innovation piece, which is the financing needs to be more flexible for the markets that we operate in, and it certainly has not been coming from a demand-driven side. So it's not really responding to what SME needs. It's trying to give them a product that has been developed elsewhere. So I think, and I think you can see that microfinance is evolving as well with mobile money and all of these areas. And for us, it's certainly that level up from microfinance before you probably start to hit your more traditional, larger scale investment.
Yeah. Okay. I think we'll just conclude. Simone, will you just say a few words before we conclude today's session? Simone, you're on mute.
Yes, of course. I will just be very concise due to the time constraint. So I want to say that it is awesome to see that we are growing steadily every month, and we have such a diverse audience from all over the world. And as for the market that was analyzed today, I want just to say that it was a niche market maybe 10 years ago. Then it boomed in 2015 after the implementation of the Sustainable Development Goals in 2015, of course. So many impact investors started to allocate funds to African PE and more. And so as of now, according to Private Equity International, impact investors have almost 43% of impact investors have funds allocated in Africa, and 52% of them wants this percentage to grow. So I'm sure many of you will fall under this category. And another thing that is important is that COVID-19 did not really interrupt fundraising in Africa, and this is good for anyone willing to invest. And that's it. I just want to say that these opportunities not only can benefit your pocket due to the return that they generate, but they will also benefit local communities in terms of quality of life, and not last will benefit the environment. And this is our main purpose at 4IP that we share along with our partners, with the Swiss Impact Investment Association and the IPA, and along, of course, with Challenges Group. And I want to thank Neil for his presentation and his speech, and our and our Christian, Peter, and Svetlana that were there that introduced us to this event today. And I want to tell you that we will be hosting a new event next month with 2 external speakers along with us. So thank you for your time. Again, thank you, Neil, for your presentation, and we are looking forward to meeting you soon.
Thank you so much. Thank you, Christian. Maybe at some point in the world we might all be in the same room together. Fingers crossed. Christian, you're on mute.
Christian.
Yeah, just want to wish you all a healthy and a safe and a prosperous and successful 2021. Hopefully on the other side of the COVID pandemic, and we look forward to collaborating with you through the various networks that we all belong to. So have a nice evening and see you next month. Bye bye.
Bye.
All right, good night. Thank you.
Bye. Thank you so much. It's very good.
Okay, Hagai, I will send you over the recording once I've downloaded it, so you can upload it on the websites. So thank you for participating, Calvin and Hagai. See you soon. Bye bye. Stop the recording now.